The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. And we've got an interesting day starting to wind up here in the markets. As we start the day off, we'll check in with the S&P. We're off about 8 points and 9 points on the S&P cash at 1987. Volume is pretty decent for this time of day, 2.57 billion shares on the New York Consolidated Tape and 1.3 billion on the NASDAQ. And we've got a few sectors kind of moving around, a little sector rotation going on also. And we'll talk about that today. Also have some very interesting news in both technology and other places. And as always, we like to get started with a little bit of history. But you know what? I was running behind this day. So what we're going to do is we're going to talk about it here in just a second. As soon as I get my slide up, I'm running behind. Anyway, where's my little thingy? Got to look at, I'm all set. So we're ready to kick the show off now. Sorry about the brief delay.
That it's all just a little bit of history repeating.
Of course, on this day in 1846, George Westinghouse Jr. is born. Of course, for those people that are familiar with the story of how electric power came to the United States, we had Mr. Edison to begin with, and he basically came up with the light bulb. And of course, if you got a light bulb, you need power to power it, and of course, you need generators to generate that. And Mr. Tesla was nice enough to work for Mr. Edison and, of course, stole all his designs and everything else and basically kicked him out and told everybody he was insane, although he was. That's the part is that wasn't quite accurate. He was a mad genius, I think would have been a better description of it. And, of course, George Westinghouse was a pretty big magnet already. Found Mr. Tesla digging ditches because he was so upset about being screwed over by Mr. Edison. George Westinghouse got him out of the ditch digging business, told him that he wanted him to design alternating current and generators for alternating current. Of course, there were a lot of wars between that. Tesla got all the credits for it, but at the last minute, there wasn't enough money to go around to actually pay him. He was so mad at Mr. Edison that he signed all the rights away to Mr. Westinghouse. Mr. Westinghouse didn't make all that much money on it either, but of course, they were more interested in screwing over Mr. Edison, and both of them spent a great deal of cash, almost all of theirs. Of course, this propelled Mr. Tesla into a level of I guess the best way to think of him would be the way that we think of Stephen Hawking's now as some kind of brilliant guy. Wasn't in a wheelchair, but brilliant, if not a little bit mad. But on this day in 1946, he was born. He came up with the air brakes for train travel and founded the Westinghouse Electric Company. And it's all history from there. But a little less mad than Edison. And I think we can thank him for being a little bit vindictive in trying to screw over Mr. Edison, because AC was the way to go on this day in 1846. What else do we have going on out here? If I can find my mouse. I've got so many monitors. The question is, where do you find that little pointer at sometimes? But that's it. Of course, flashing across most of financial infotainment TV today is a article or a news story about FanDuel. If you've seen these sites advertised, they basically will allow you to gamble on football. There was a ruling, I think, in the Supreme Court, if I remember right, about how things, if you are wagering on things and they are games of skill, then they're okay. If they're not games of skill, then it is pure gambling. And the idea would be anything that has finite odds. This would also mean that wagering on horses maybe would not be the same thing, but that's already been decided. Anyway, this one kind of snuck through the cracks. You could now gamble on football every week as long as you had a quote-unquote fantasy football team, and that's how it was disguised. But I've talked many times about using options during expiration as a way of figuring out what's going on. In fact, we talked, I think, in the den with Steve Rhodes last Thursday. And I was going, yeah, the option market makers think that the market's going to expire at about 2,000 on the S&P cash. And let me put it that way. It was just so far away that I thought they were nuts, but they didn't blink. They continued to think that this market would close closer to 2,000 than 1,900 come a week from tomorrow. Well, actually, 8 trading days from tomorrow. 7 trading days from tomorrow. But if you put enough people together, they'll give you the right odds. And what people and a mid-level manager at what's that? Not FanDuel. What's the other one? I can't remember the name of the company at the moment. Anyway, there were 2 competing companies. One is FanDuel. That ended up paying out the $350,000, but they would have paid out the money no matter what. But these are all set up as pari-mutuel wagering. But what the gentleman had at the other company was access to all the bets that were made on his site. So what he did was figure out a way of basically playing Moneyball. Now, we can see the same thing in options. We can see how many options there are, how many people are putting them out, the up and down side. Now, you really don't know what's going on with them when we talk about, if they've got hedges by owning the equities and then maybe shorting the options on the other side. This is extremely clear. This is the numbers that these guys had were as good as going to a horse track and seeing the odds. Now, everybody sees the odds at a horse track, but not everybody sees the odds on these rival sites. DraftKings, thank you very much. And it is one of those things where by having the odds, he could go out and play. Now, from another article I saw, he basically played for 5 weeks in a row and was playing the outside odds on this, and I think he was putting $1,000 a week into it. So he ended up putting $4,000 into it, getting $350,000 back out of it. But he did it because he had the odds, and guess what? No one else did. So he knew pretty much what the wisdom of crowds was telling him, and that was if you get enough people together at any one time, they can give you the correct odds. In fact, if you can get about 25 people in a bar and put a gallon jar full of marbles on a table and get them all to guess, you're probably going to come in within about 3% plus or minus how many are in there. Now, a lot of people will be way high and a lot of people will be way low, but the average is probably going to be with about 24 people, within about 3% of the real number of marbles in that. Now, someone's going to guess 50, someone's going to guess 1,000, and there's going to be some kind of real, 254 or something in there. A lot of people will be close. A lot of people will be very far away. But pretty much you'll be within 3% with 24 people guessing, if they're not drunk. Let me put it that way. Maybe someone will guess 1 just because he's smashed. But this is a statistical game that's been played in higher education for years, and that is the first day of statistics, just to have everybody in the class guess. But once you set those odds, they can tell you a great deal. And when you hear me talk about options expiration, this is exactly what we're looking at. These numbers were a little bit better than we get for options because we don't see both sides of the trade. We only see the options sides of those trades. We don't see equities that may be hedges on the other side. But this is how accurate and how much money you can make when you do have correct odds, and basically you become the house. If you know what you're doing and you have any kind of background in math, it's not too hard to figure out how this guy won $350,000. Nothing in the articles I saw or news clips I saw today said he was fired, which I thought was very interesting. But I don't know what else you can say about it other than I'm going to dig into it more. The other side of this now is, of course, a lot of calls for Congress to regulate this so people can't do it anymore. But like I said, no real indication that the guy got fired. They're just saying that nobody at the place can gamble on it. I think probably if he was a little smarter, he would have got his sister's brother's cousin or something to do it for a while and just made it on the cut. If you work at one firm and you win $350,000 from another firm, I think people are going to scratch their heads. So he was pretty smart, not that smart, only won once. He would have been a lot better off dipping his toe in it every week. Anyway, that is part of being the market, but also gives you a little indication as to players or big players in the stock market themselves. They always have a little bit better or a leg up on us because they do have the book on the other side. So there's my tie-in to the markets today. Without Mary. What else? Was talking in the den this morning. I was watching the live stream of the Microsoft hardware event today. First of all, they said 110 million devices with Windows 10 are now installed out there. They were showing some fairly interesting stuff. A massively fast smartphone that has liquid cooling built into it. Basically, these phones are going to be in the $500 to $700 range. But what they have is the ability to act much more like a laptop or a PC than they do a smartphone. If you run around and are always giving just PowerPoint demonstrations or playing video or doing a lot of other stuff, don't want to haul everything away. Very interesting new phones. But it was what they showed after that that really has me thinking that Microsoft is still hitting on all cylinders and maybe more Apple than Apple is today. We'll come back and talk about this new stuff while why NVIDIA is running higher and some new inventions for Microsoft.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back, I think. And anyway, we're talking about Windows and Microsoft when we were done. But it is like Microsoft and Apple have kind of switched here lately, mostly because of the incredible hardware coming out of Microsoft, like today. The phones were interesting. I don't know if it's too little too late. But they have a few things that are very neat. One is a new display docker that you can plug into these phones and or any of their laptops and hook them to very high resolution displays. But what's really interesting is they've got a new Surface Pro 4. And these things are kind of like everybody always talked about the Apple Air laptop as being, you know, just so much faster and cooler and higher resolution. Literally everything on these, they basically showed two new devices. One is another Surface. That's one with a kind of a removable, thin keyboard, but you can also use touch and pen. The new 4 comes out, of course, with a very fast processor. But they've done and thrown just about everything at it, including the kitchen sink. But what most people were not looking at today or expecting was that they would come out with a laptop This new laptop is called the Surface Book. And it has a bunch of stuff that you would say only Apple would come out with. Very, very interesting stuff. To me, watching NVIDIA the last couple of weeks rise, I thought something was going on out there. I never thought much about NVIDIA because they didn't have a dance partner. They didn't have a major manufacturer out there that was helping them. They could continue selling video boards to gamers, but that was probably the extent of them making a great deal of cash. Part of this new book that is incredibly fast, in fact, it's even more powerful than the desktop that I have underneath the desk here that I built myself and spent a lot of time with liquid cooling and everything else. This one uses the new Skylake processors from Intel, but it has, and we'll talk about it more on Friday afternoon with Tom O'Brien, but it has some really killer stuff. But a lot of new things on there, fingerprint readers on the keyboard, Gorilla Glass 4, super high resolution monitors, USB-C ports that are lightning fast. They moved, I think, 3 or 4 gigabytes across in about 3 seconds in the demo. But not only that, but a incredibly powerful laptop. So if you're looking for the Lamborghini of laptops, this far exceeds what the Apple Air will do in both speeds and capabilities. They had a new Surface Pen to go with both the Pro and the Book. But the Book was really what kind of separated, I think, what most people were expecting, what Microsoft actually did. The keyboard of the Book actually has NVIDIA GPUs built into it, and they are incredibly fast. You can detach the keyboard also, and it's got this very cool thing that looks like that connects the keyboard to the tablet portion of this laptop. And it looks kind of like tank treads, probably the best way I could say, like a caterpillar tread on the side. You'll see it, I'm sure, on TV and in the next couple of days. But very interesting stuff. It attaches with a thing called muscle wire, where the wires that actually hold it in place so it won't fall apart, like it was a laptop first and foremost, that you could never pull off the thing. You push a little button and it electronically changes the molecular composition of this wire and loosens it up, much like a muscle. So you put it back on, you push this button, and it cinches it up, and it's not coming off. It's not like these kind of magnetic attachments that we are seeing in both the Apple and the current tablets from, I wouldn't call them, the Surface tablets from it. So anyway, incredibly neat stuff. The HoloLens is going to be available for developers in the first quarter of 2016. The entire kit's going to be $3,000 for developers. It looks to me like they are still talking about $995 for the HoloLens stuff when it does come out. They didn't say any more about that. Just that the developers will have versions and get ready to go. And still talking, maybe hinting around $1,000 for those lenses. Anyway, I have to say that I haven't really wanted anything. The Surfaces have been interesting to this point. I have to say that they've got some stuff I want now. There is no more waiting. This stuff is cool. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com. nadex.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back, and we're going to go to Jack in Florida. How you doing today, Jack?
Great. How you doing?
Great.
Very good. Hey, I've been enjoying listening to you. I've listened to you for the last couple of months, and you take a much more circumspect view of the markets than most of the guys, and I enjoy that. The thing that you spoke about earlier today regarding the options market, particularly about what they're looking for a week from, did you say a week from Friday?
Yes. What happens tomorrow is generally option market makers will do something called going delta neutral. That is, they'll make sure that there is no way that a big market move will cause a big difference in how much money they make in the last 7 trading days of the options, because the premium's down to a minimum. Most of these options have been out for 30, 60, maybe 90 days, right? And they've captured all that premium as they've collapsed, or they sold a bunch of them last week when everything was down around 1900, right? So they will do several things. One, they'll buy equities on the opposite side of that trade to make sure that they really can't lose any more, or they'll get synthetic options positions back on it. But tomorrow normally is a fairly decently volatile day because they are getting in and out to lock those profits in before the last 7 trading days. So normally when I look at options, I look at them after the close tomorrow and start looking at where option market makers think that the market is going to.
Right. And you mentioned 2000 looked like, you said it was more likely than...
What I said was
I want to hear it. Yeah, I want to hear
a week ago they did. What you can find out, though, is that this is when things really tighten up. Once they go delta neutral, it's in their benefit to go ahead and, if they can, push the market that way. So you will see things like them coming out with upgrades and downgrades and all kinds of spurious manufactured news and everything else, right?
Yes.
Because one of the biggest ways that Wall Street makes money is by selling options. It is one of the most profitable parts of all their businesses. So what you can start seeing is a lot of times a clue. Go ahead.
You use that obviously to give yourself some idea of the direction of the market X days in the future.
Right. If you heard the first part of my show when I was talking about how the guy basically rigged the sports betting.
Yes.
They totally have the book. They know, that they've sold 1,000 Apple calls at 110 and 1,500 Apple call puts, right? And they know that they've sold maybe a range of going short and long, the equity, and they know the risk profile. We don't know that. All we know is that there's so many puts and there's so many calls, but somewhere, depending on who you want to argue with, 80 or 85% of all options will go unexpired. And if you look for that point, then you will probably find some kind of idea, at least where they think it is going to go. There are some rules on this, and I've written a white paper. If you email me at path@tfnn.com, I will send it to you, but it's, 5 or 6 pages, but it gives you the outline of how to use options to predict at least where option market makers think that the market will expire. And generally, these are the best traders that you will get are in the options and are on the options desk of most of these big firms. So if you want to follow somebody that's good, follow an option market maker. They don't last long in that position if they don't do well. Yes,
and then last month, and you can certainly whack me if I'm wrong on this. Last month, before the big downdraft, they were wrong-footed.
They were. Correct? Yeah, just like any kind of pari-mutuel betting, they will be wrong once or twice a year into options expiration. So
the probability of that happening 2 times in a month, I'm taking it as low.
No. What's the option of flipping a quarter and getting heads or tails? It's 50%. It's 50% each time. You don't want to confuse the magnitude with things like frequency, right?
Okay.
If you're going to get something 2 out of 10 times, you're going to get sometimes that's 2 or 3 times. You're probably going to get that a couple of times, maybe in a row, maybe not in a row, right?
Fair enough. I know I totally understand what you're saying.
There's no reason to believe that there's anything other than random distribution on it. What I will say is most of the time, 80% of the time, tomorrow's low of the day will be the low between that and a week from that coming Friday. So there is a massive bullish bias for those 7 days, the day after they go delta neutral. So you've got to, if you are thinking about going short, you better have a compelling argument as to them doing that, right?
That is a beautiful thing. That's just what I wanted to hear you say. That's good information. That's what I was looking for. I really appreciate it.
You bet. And if you want the white paper, just email me at path@tfnn.com and I can send it to you. But it basically explains the wisdom of crowds theory, basically. Doesn't get into, it's not a higher grad school level of that. But you also, when you look at the way that the curve comes in for the money that they lose or win is important. It can tell you whether or not they have a wide view of what's happening in the market, or they think that, Apple's going to exactly close at 110 a week from Friday, or is it going to go something like 105 to 115, or do they have no idea? Maybe it's 100 to 120. Maybe earnings are coming up, and you'll see that in the curve that I'm showing on Tiger TV right now, and that is that sometimes they've got kind of a rough estimate. In this case, maybe 195 to 202, 201 maybe on the spies, and that will tell you that. But sometimes it's a V, sometimes it's a big bowl. If it's a big bowl, sometimes they're even flat, and that's a lot of times you'll see. Especially we have earnings coming out, and a lot of times you'll see these big flat things that no matter whether the stock goes up or down, the options market makers will probably lose very little unless it really moves way out of the expected range. And you'll see that. I'll be talking about that in the next couple of weeks as earnings come in.
If you had a short bias, you would be inclined to wait through that expiration period.
You need a compelling reason out here. And, you've got a lot of earnings next week, and I haven't even got into the rest of what I was going to talk about today. But we've had, tomorrow is probably going to end a lot of the pre-announcements for those stocks and earnings. We're kind of getting out of that pre-announcement thing, but I'm going to be talking as soon as we get off the phone here about some of the other stocks that are moving down on pre-announcements and just bad news.
Excellent. Thank you so much. Appreciate
you bet.
it.
Thanks. Anyway, I was going to get into some other stuff out here. But anyway, Microsoft, very neat stuff. We'll be talking about it a lot more with Tom O'Brien on Friday in the Tech Insider Hour. I probably haven't explained it well enough, but I'm going to need to read a little bit more about it. But I have to tell you, some of the coolest stuff since they introduced the Surface, they have made the Mac Daddy of laptops and convertible tablets. Let me put it that way. What else do we have going on? Oh, I wanted to talk about some of the stocks out here that are going on. Again, a lot of rotation in these markets. One of the things that we're seeing, of course, is 12 points off on the IBB. This is not just one or two stocks, or one stock, but more than that. What is it? ILMN, Illumina. These folks make DNA sequencing. And, of course, they blew through the 145 low of October 15th of 2014 today. They're trying to get back into that range. Did it with 14 million shares already compared to the 2.2 million shares out there. But that was just part of it. There are other companies in this same vein, and that explains a lot more. EXAS had a wicked gap down. Now, these people make a test for colorectal drugs. And if you look at this chart, they got a ruling, I think, from the FDA about the efficacy of their test and how right or wrong it is. They'll always say, we can get false positives and false negatives. But apparently the false negatives and false positives were a lot more than everybody believed before this drug went on, or this test went on sale. And if you can't show some fairly decent efficacy, then the insurance companies will not allow or pay for these tests. And that's why this thing got blown apart today and is off, what is it, off 46% today. But not just Illumina coming out with a pre-warning being off 11 or 12% today, but there are several of these stocks out here that were in this sector. One of the other things that has also happened is political, and that is the rumors of Joe Biden running for president. But those rumors are not new. What is new is his vice president, hopeful, is being floated around, and that is Mrs. Warren from Massachusetts. And pretty much that whole wing of the party is more than willing to go after this biotech sector. In 1994, when Miss Clinton decided she was going to delve into healthcare, this sector was absolutely crucified, and it looks like more of a political decision than anything else. No one wants to be anywhere close to these right now, with the choice of seeing multiple candidates now on one side of the aisle that would go after, most likely, a lot of these biotechs / healthcare / testing stocks. So you might as well be a leper in this sector right now. No one wants anything to do with you if you're even hinting out here that you might have problems. Exact scientists off very hard. Continuing to see additional weakness in some of these other companies. And someone called me about this maybe a year and a half ago, and I just vaguely remembered it, but I saw the news article on it today. It's a penny stock now. It was $5 not that long ago, January 29th. But this is one of these companies that was busy buying up huge amounts of patents. And I said, you know, I just can't. I think this was even much longer. Let's go back and look. Maybe it was several years ago. Nah, I think it was when this thing was really running, in this October 2012 or 2013 area. Can't remember which one. Maybe it was 2014. And I said, you know, I just don't like companies that collect patents and then try to make money. We went through that with Rambus collecting up patents for memory, and that didn't work out so well. Anyway, this thing cratered on a fairly extensive decision from the courts today and yesterday. Well, literally yesterday, they got creamed again. But the patents are continually starting to be weakened by the courts, and I can't say that patent protection, other than suing and keeping people tied up, really is that good a business model anywhere in the near future. You can give me a call at 877-927-6648. You can send me an email me at path@tfnn.com. And, of course, you can post messages in the den. Question in the den, or statement in the den, says, Dave, would you really do everyone a service by explaining and being more specific about delta neutral stuff and why they choose the dates that they do? The dates that are chosen are basically mathematical models that say that at this point, the volatility exceeds what will happen in the last few days of expiration. If you're buying a put or a call and you're buying it 60 days out, you know, by the time you get to the last week of that, you're probably gone through 95% of the premium price, which is what they're hoping to collect. And most of the time they will go to, for the most part, totally worthless, which means that they get to keep all the premium. So there is a big desire to keep the stock in those narrow channels where the most amount of money is going to be lost. But there is a mathematical model, and that mathematical model has pretty much been proved to be true, and that is once you get to 7 days of a option that's been out there for a while, you can lose a lot. You're probably not going to make a lot. And they just decided that Wednesday is pretty much the day, week before expiration.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Another question was, please, who are the decision makers regarding this, Dave? And we're talking about options expiration and going delta neutral. And the answer to this is mathematicians. Ever since Black-Scholes, which is a formula that comes up on the pricing of options, came out, I think, what is it, late 70s, early 80s? In fact, 3 out of 4 computers, micro workstations in the early 80s were all sold to people trying to use them for options in the marketplace. But probably by about 1992 or 3, the option market makers had figured everything out. And by about 1998, you started to see the effect of these option market makers going delta neutral. But if you just work the Black-Scholes formula out, you will see that basically the risk becomes more than the reward with about 7 to 8 trading days left. And so they just go ahead and basically put enough on both sides of the bet that it zeroes out. So they just say, okay, there's not enough money to be made. I don't want to take the option of losing a bunch of money. So I'll do one of two things. I'll sell more puts or calls. I'll buy, if I have a lot of puts, maybe I'll buy the equity on the other side of it. And I've zeroed out my trade now. I don't care if it goes up or it goes down in the next week or so. So basically, just zero out the trades, but it is a byproduct of the Black-Scholes formula. And that tells them pretty much 7 days means that we can lose a lot and make very little, and we don't like that. Is the CBN? No, it is option market makers. Is the CBOE involved? No. It is basically it is like the New York Stock Exchange, where you have specialists that really delve into buying and selling options, most of the time in specific equities. So there is a specialist that knows his stock inside or out. He may actually be delving with a great deal of them. And most likely they are setting up computer programs to run all during the day that always watch people getting in and out of them. CBO is loaded with its own market makers, but it's not like it's some kind of cabal. They all have the same formula. They may modify it slightly, but it doesn't change a lot. FCX, I thought that was kind of interesting today. Looks like Carl Icahn is getting busy in Freeport-McMoRan, really getting some of the juice into the stock. What you don't see is a great deal of volume. It is getting close to the September 17th high, $12.59. You need 48 million shares. You got 39 today. So not too bad. Maybe it may get up to that 48, but you want to see the close, and of course you want to see it break $12.59 with volume if you think this thing is off the lows. What I dislike about this is it has not tested the August 26th low at $7.76. It did kind of get back into that candle. The volume was about the same, though, on September 28th, which tells me that we could still see one more dip back lower. Carl Icahn will not like that. Of course, this comes on the heel of a lot of financial engineering. DuPont out here today having a nice little bounce, singing The Witch is Dead for the CEO of this one. And it got up to $57.96. A lot of people very short this stock. And again, very tough to be short some of these stocks out here. I'm thinking that we get a fairly decent indication and a way to put on some more trades tomorrow. And I'm sitting in all cash and loving it. Loving it, I say. We'll see you tomorrow. Same bat channel, same bat time. Remember to sell when you can, not when you have to. We'll see you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.